Hello traders, how are you doing? Welcome back to my YouTube channel. I'm Julius Wealth William. If you are joining us for the first time on this channel, help us click your subscribe button and turn on the notification so that you won't miss any opportunity that will be shared on this channel. I have so many trades that have been lined up. GBP is trending, USD CHF is trending, NZD USD is trending, GBP JPY is trending. We have many trades that are trending. So I would love you to jump in to any of these trades that is trending and take advantage of the market. So I'll be starting with the NZD USD. NZD USD, this New Zealand dollars against USD dollars. I would love you to jump into this market. Remember that we are using a very simple approach to the market. We don't need much drawing of this for you to make money in this market. How simple is your analysis is, that is how you will be profitable. You don't need to complicate the whole thing. Many traders try to complicate the analysis, but we are using a very simple approach, which is an approach that you all must have known. And if you don't know how to use this approach, the top-down analysis, I have a video that explains how to use the top-down analysis. You can go back to our previous videos and watch that approach, and I tell you that it is so easy and you can use it for any strategy. It is an approach to the market which can be used in any strategy. So let's go back to our main discussion for today. The NZD is really lining up, and I really love it because if I want all my students, I want all my subscribers to also enjoy the money that is being lined up on the chart. NZD, on a nutshell, our approach, you start from the higher time frame to analyze the market. This is a top-down analysis where you start the market, analyzing the market from the higher time frame, the monthly time frame. Precisely, the monthly time frame will only give you a direction. The monthly time frame gives you the overall direction of the market. This is you that can see the market at the bigger picture. You can see the bigger picture of the market, and then you scale down to a lower time frame to get your entry. So from the monthly time frame, what can you see? I can see that the market is making a double. The market is making even a triple bottom. This is the first touch, the second touch, and the third touch. I can see this from the higher time frame. This is what cannot be seen if you are on a lower time frame trying to project the market. But when you are on the higher time frame, you can see what has happened. You see, the market came into this zone in the year 2020, and in the year 2022, the market came into this zone again, and in the year 2025, the market came again into this zone, making this zone to be a strong support level. So this is a strong support level, and it's not just support level. You see, we have a chart pattern has appeared, which is the triple bottom, the first touch, the second touch, and the third touch. With this, I know what my higher time frame is saying. Then I scale down to my lower time frame. My lower time frame, okay, the next time frame, which is the weekly time frame, is a weekly time frame that I use in plotting my key levels. See how nice and simple my key levels are. It is easy to draw your key level. How will you be able to draw your key level? Just go to our previous video, and you will see how to draw the key level. You see how to draw the key level. Go to my analysis. Okay, go to my previous video and you see how to draw the key levels. The key levels are very simple to draw. So what are the key levels? The key levels are the region or zone where we have our support and resistance. So you can see that in this zone we have our support and resistance. In this zone, we have our support and resistance, which is very important for you to be guided. So the key levels helps us to be guided, for us to know what the market is doing. If you can see that the market moves from zone to zone, the market moves from zone to zone, from this zone to this zone, from this zone to this zone, from this zone to this zone. So price will move from this zone to the next zone. So the market moves from zone to zone. That is how the market works. It moves from zone to zone. Then we move to our daily time frame. What do we do on our daily time frame? We we spot the trend that is in line with the overall direction. What is the overall direction saying? The overall direction is saying be bullish. Well, we have a triple bottom at the support level. So we are the overall the trend that is in line with the overall direction is bullish. So we use a trend line tool to mark out the trend. Remember how to mark your trend line. There's a video on that, on how to mark your trend line. You don't mark your trend line on the body of the candlestick. You mark them on the wick of the candlestick, the wick or the shadow of the candlestick. So this is our trend line. And then we move to our 4-hour candlestick. Move to our 4-hour candlestick where we this is a 4 hours candlestick. We move to our 4 hours time frame. So already price has gone into our trend line. Already price has gone into this trend line and is moving higher. At this point, you can't just jump into this market. You can't jump into this market because already price has gone far, and if you go in here, you are buying at a higher rate. So what should be done? You just need to mark out your minor level, and this is our minor level where this is our minor level. This is our minor level, and in a minor level, before you jump into this market, you need to wait for price to break above this level and give you a bullish. You need to wait for price to break out of this level and give you a bullish confirmation before entering. So that is a counter trend line, which you need price to come and break. Price needs to come and break out of this trend line and give you an entry, and this will be your target for. So you can even go as low as your can go as low as your 1 hour time frame to refine your entry. to refine your entry. So already price is high. You can't jump in here because price is high. So that is the NZD USD in a nutshell. Then let's move to the next P, which is GBP JPY. GBP JPY. GBP JPY. We start from our higher time frame as well to analyze the market. We plot our key levels on these are key levels which is being plotted on the weekly time frame. I had already done this. If you want to know how to draw your key levels, you go to our previous videos on the best strategy to the forex market, where you know how to draw your key levels. Okay, this is the current trend. This is the current trend of this market. This is the trend of this market. This is the trend of this market. So what is GBP JPY doing? GBP JPY is bearish. GBP JPY is bearish. You can see that price came into this trend line, broke out of this trend line, and was just rallying around this trend line, came in and tested this trend line again, and price is out of this trend line, coming down. So how are you going to get an entry level to this market? You need to scale down to your lower time frame. You need to scale down to your lower time frame because the market might be trickish. Market might be trickish. Okay, let's draw. The market might be trickish. Okay, this is an outer trend line for the trend inside. For this particular market, before you go into this market, you need to wait for price to come in here and break out of this level. See, this is a region of support and resistance, and it even from this region. So this region is a very strong level. This is a very strong, even though it is a minor level, but this level is strong. So what are you expecting price to do there? Expecting price to break out of this trend line, break out and retest, then we get an entry down to these are targets, these are overall targets. That is our overall target. You need a breakout and a retest somewhere. This is our target. That's our overall target. Eventually, we are into 1:6 to reward ratio. 1:6 risk to reward ratio. So this is what we are expecting this market to do. This is what we are expecting this market to do. Then we move to GBP USD. GBP USD. GBP USD. Wow. This GBP USD, we start from the monthly time frame to see the overall direction already. You've seen what the market is doing and where is the next target of price. This is the next, we're expecting price to come in here. This is the next target of this market. But you can't just go into this market because it is a bullish market. You need to know the right price to buy so that you won't buy when the price is already high. You move to our weekly time frame. I use our weekly time frame to plot these levels. The levels, they are very simple to be drawn. Just go to that video and draw and watch the videos and then practice how to draw the key levels. You practice how to draw the key levels. It is as simple as So this is our key levels, and then move to a daily time frame where you spot the trend that is in line with this market. So I drew this trend. This is what I was expecting price to do within the week, but currently price has not done it. I was expecting price to come into this level before I could buy, but price has broken this zone, which means that price did not respect this other trend line, but this is the trend line that price eventually respected. This because in every trend we have inner trend in the outer trend. So this is the inner trend, and eventually price respected this. Eventually price respected this other trend. Price respected this other trend. So now the market is bullish, and where is the target? This is a target that this price is coming to this level. So how are you going to position yourself to allow price to come in here? I'll take away this order, but price in future, price might come in to this trend line. But for now, this is the current trend at which the market is being traded. So I'll take off this other trend line. You see how my chart is so clean. I don't like complicating issues or complicating my chart. Instead, I make my chart to be as simple as so that anybody can go through it and understand what we are doing. So currently, this is what price is doing, and you need to wait for a pullback into this level where price broke out from. We need price to pull back into this level, into that region. Price need to pull back, and I use my Fibonacci tool, which I will drop a video on how to use a Fibonacci tool very soon. So just stay connected. That's why I said you need to subscribe to this YouTube channel and click the you need to subscribe to this YouTube channel and on your notification button. When you're on your notification button, the moment a video is being dropped, you'll be the first to watch this video. So I will be dropping videos almost every time, especially videos on trading, educational content. So this YouTube channel is mainly dedicated for educational content. So stay connected to this YouTube channel. We will give you the best. We will save you the best. So I use my Fibonacci tool to plot from swing low to swing high. So now I'm expecting price to come into this yellow region. Price should come into this yellow region. I'm expecting price to come into this yellow region. Once price comes into that yellow region, you can now expect a buy. You can now expect a buy. But for now, price has gone far. Price has broken this high to make a higher high. Remember the structure of a bullish market, higher highs and higher lows, higher highs and higher lows. So already price had broken this the previous high to make a higher high. So now we are expecting price to come and make a higher low so that you jump into the market when the market is doing a higher low than price doing a higher high and you are jumping into the market when price has gone far already. So this is what we are expecting: price pulling into a significant region of Fibonacci retracement level, and then once you get a confirmation entry with your candlestick pattern, you can eventually buy too. So this is going to be our first target area. Yes, because when price comes in here, price will break the previous level. Price will break this previous level and price will give us a new higher high. So this is a target region where price is going to do the new higher high. So first you need to observe these areas so that you won't be hoping for, because there are some person that will be hunting for all of this, not knowing that price will come in here and eventually price might retrace. So you will be able to build a retracement of this market. So it's good you take what you've seen from the market. We'll move to the next currency, which is the USD chief. This is going to be the last. From the higher time frame, the guy is saying bearish. I've been bearish in this market for a long time, though I eventually left the market. I've been bearish. So you move to your daily time frame. Daily time frame, your daily time frame, you draw the. So this is what I saw, and I jump into this market at this point. This is the area I came in. Once the price broke out and retested, I was in for this market. But eventually, I left this market somewhere here. Yes, I left this market somewhere here. And now the market has been consolidating for a longer period. Market has been consolidating, but currently, as at the point or the time I'm doing this video, price has broken out of this range. Price has broken out of this range. So you're expecting price to pull back into that range. Price has broken. Okay, let's move to a 4-hour time frame. Meanwhile, our target is the next blue zone. Our target is the next blue zone. So we're expecting price to pull back into a significant level of where price broke out from. This will be our neckline, and eventually price is coming down here. This is the overall target of the market. So now that price has broken out of the range, so we are expecting price to go back to that region that it broke out from. And once price goes back to that region, position yourself to sell in this market. So this is my setup. This is what I'm watching out for before I enter the market. So thank you for sticking to this video. I know this video must have been lengthy because I came to analyze up to 4 pays. I'm telling you, these are 4 juicy pays that you don't have to miss their opportunity. Just put your hands on decks and pay attention to these videos and be the first to make money from this analysis. And I will come back again to review this analysis for us to know what to do as the market is moving on. Okay, thank you for watching. Staying tuned till the end of this video. I would love you to subscribe to this channel if you haven't done that, and turn on your notification button so that you'll be the first person to see this video. I don't want you to miss any opportunity that I'm dropping on this YouTube channel. Right? Peace out.